Welcome back. Good Monday morning, everybody. Thanks so much for joining us. I'm Maria Bartiromo, and it is Monday, March 9th. Your top stories right now, 7 a.m. on the East Coast. Get your seatbelt on. We've got market mayhem underway on Wall Street. A global market sell-off right now. Futures are trading limit down. Meanwhile, the Dow Jones Industrial Average is down at 1,255 points. Limit down prevents declines larger than 5%. So there are these circuit breakers in place to keep things calm and orderly. The declines could be a lot worse at the opening of trading, but right now we're looking at limit down with the Dow down 5%, NASDAQ down just under 5%, same with the S&P 500 with a decline of 145 points. The trigger for this sell-off this morning is the price of oil. Oil prices are plummeting because Saudi Arabia has launched a price war after Russia said it would not agree to any production cuts, which OPEC proposed last week. Oil is seeing its worst sell-off since the start of the Gulf War in 1991. Oil prices down 23%, $31.74 a barrel is the last trade on oil. These kinds of numbers could cause defaults in the oil market, and that is really what the worry is in terms of equities. Yields on the Treasury also dipping below 0.4% earlier. Take a look at this. These yields are dropping like a rock. You've got the 10-year Treasury now at 0.456%. That is down 31 basis points. Even the 30-year is falling below 1% for the first time in history. This morning, the 30-year yield is at 0.870%. That's down 42 basis points. The whole market, nowhere to hide, but big banks are certainly under big pressure. Concerns are growing about the global economy. Investors are looking to the Federal Reserve for another rate cut, and there's a lot of speculation that the Congress could come up with fiscal stimuluses as well, because we are expecting a sharp slowdown in growth. Global markets this morning, deep sell-off in Europe. Take a look at the big banks there and the European indices, and you see the same. The FT 100 in London is down 372 points. That's 5.75%. The CAC 40 in Paris is down 334 points, 6.5%. And the DAX index in Germany down 750 points. There, too, 6.5%. In Asia overnight, red across the board. China's exports came out. They tumbled 17.25% in January and February. More signs of trouble in Japan as well. Fourth quarter GDP there revised lower, showing that the economy in Japan contracted 7.1% from the previous quarter. Of course, the coronavirus crisis is also among the worries. The cases in the United States and abroad growing. The White House reportedly looking into emergency measures. Meanwhile, overseas, Italy is on lockdown. They reported a surge in deaths. They are locking down the northern region by closing borders. In Italy, Dr. Oz is going to be here later on this hour with some important tips on staying healthy at home. And when you travel, don't miss this, because if you are planning on travel, you want to hear Dr. Oz's tips on that. Meanwhile, the 2020 race continues to heat up. Tomorrow's a big day. Former Vice President Joe Biden, Senator Bernie Sanders securing endorsements and trading sharp words ahead of the Michigan primary tomorrow. Morning with Maria is live right now. And markets, the big story this morning showing that the limit down has the markets down about almost 5% across the board. This on top of Friday's close, where we actually saw worries throughout the market, but it was volatile. And by the close on Friday, we actually ended off of the worst levels of the day. Some of the top stories that we are watching this morning: California preparing for a cruise ship to dock in Oakland, California, with at least 21 passengers infected with coronavirus aboard that ship. The Grand Princess has more than 3,500 people on board from 54 countries. Governor Gavin Newsom now working to ease concerns that any of them will be released into the population before a 14-day quarantine. Republican lawmakers Ted Cruz and Paul Gosar are self-quarantining and missing key votes. The two say that they were feeling fine after contact with a person who did test positive for coronavirus at a recent political conference. Neither are said to be showing any symptoms this morning. Italy locking down 16 million people in the northern part of the country. Officials at Disneyland Paris also checking on staff after one worker tested positive for coronavirus. The park remains open. There, the coronavirus death toll is now topping 3,800 people, with more than 109,000 cases reported worldwide, affecting 98 countries. We just spoke with the Surgeon General. He said the risk of death increases for people above 80, and the risk of serious care in terms of getting sick risks above 60 years old. As spring break approaches, Florida attractions are keeping an eye on the outbreak outbreak, of course, Disney World officials have released an action plan if a visitor is thought to have the virus, and they also plan on fumigating and disinfecting the park as often as possible. Vice President Mike Pence is stressing this weekend that it is still safe to travel in the United States. The vice president did, however, stress that seniors and those with underlying medical conditions are at most risk. They are saying avoid cruises. Last year, the city of Orlando attracted 75 million visitors. Happening overnight, North Korea launched at least 3 projectiles in its second weapons test in a week. These projectiles, believed to be ballistic missiles, flew for more than 120 miles before dropping in the Sea of Japan. The new launches come just 2 days after North Korea threatened, quote, momentous action against those who object to its military drills. Oil, one of the leading stories of the markets today. Certainly, prices are plunging amid a clash between Saudi Arabia and Russia. The Saudis cut prices after no deal was reached between OPEC and non-OPEC countries on production cuts. Joining us right now is the former president of Shell Oil, John Hofmeister. And John, it's great to see you this morning. Thanks very much for joining us. We've got a serious sell-off in many of the oil companies this morning as we watch oil prices plummet to the $33 a barrel level. Tell us the implications of this, John, and how oil companies, perhaps with a lot of debt, may get impacted here.
Well, this is raw politics at its worst. A communist dictator not going to have terms dictated to him. A sovereign who is basically throwing his toys out of the pram because he's so upset. And both are pretty upset at the success of the U.S. Now, the success of the U.S. has come at a cost because there are many smaller companies, highly leveraged, and they are counting on a much higher oil price for, their loan repayments and their actual cash flow. And so this is going to be very tough on some companies, Maria, and they just need to button down. But, we've been through this before. This industry is not for the faint of heart. People who understand this industry never go into a business plan without a low price scenario as well as a high price scenario and then a hoped for price scenario.
Yeah.
So for the majors, I'm not worried because they've been through this. They know what to do. They know how to cut costs. They know how to rebound to this. They'll slow down their capital spend, et cetera. For the smaller companies and particularly for the oil field services who will feel the brunt of the cutback in capital spending, this is going to be a tough row to hoe.
And this is the companies that you're talking about. This is exactly what countries like Russia wants to see. They want to see those oil companies that have been leading the fracking revolution here to be financially broken. And that's what could happen if you've got all of these leveraged companies counting on a certain price of oil now down to the 30 level.
That's right. This is a direct attack, in my opinion, by Putin against the success of the American industry in the face of all the sanctions that he and his country have felt because of U.S. success. So this is enmity in its worst form, and he's not going to back off because he doesn't have to. And inflicting pain on his own people is not really his top priority or concern.
And this is what I said to the group during the commercial break, Scott, when I said, look, remember during the financial crisis when we heard reports of the Chinese and the Russians getting together where the leader of Russia said to the leader of China, now is the perfect time to start selling some of these securities that we own of the U.S. to pile on and create and make the situation even worse. And that's exactly what's playing out.
Yeah, to further the pain. And I think, John, as you pointed out, there's a lot of, let's just say, a lot of scary tactics going on, too, I think, with respect to what's happening with Russia. And clearly, one thing you mentioned that I think is really a key point to take away is the capital restructuring that it could occur here. I mean, Maria and I and Dagan and Kellyanne have been talking about some of the debt instruments that are out there on the oil side of things. They can restructure some of the balance sheets and some of the operations, cash operations, too, John, going forward, if they do have to cut dividends to help service that debt, correct?
Yes, they can, although I think dividends have been under pressure for quite a while. So it's not like there's a huge amount of flexibility. And we know the banks have really been getting hard over on the industry. And so it's going to be a lean time. And the strong will survive. The weak will probably go through a period of rationalization. I think we'll see fewer companies coming out the other end of this.
John, it's Dagan McDowell. In terms of help from the federal government, what could assist these companies in the short run? Deferred tax payments? Seems like it would take more than that.
Yeah, I'm not sure the industry really wants any kind of a federal bailout. There may be individual companies that might like something, but the industry doesn't really, from a reputation standpoint, doesn't lean towards any kind of governmental help. They know how to take care of themselves by and large. If it's offered, some may take it, but I think many would just say no thank you.
You know, it's interesting to look at Saudi Aramco. The stock is now below its IPO price, but pretty much Saudi Aramco was the one who cut prices to get back at Russia. So here you have a company plummeting by its own decision-making, John, because they say, oh, really, Russia, you're not going to go along with the OPEC cuts? Then we're going to cut prices.
Well, anyone that invested in Saudi Aramco should know that they did not invest into a free market. This is anything that is controlled by the Kingdom of Saudi Arabia is not a free market economy, and it's going to be you're subject to manipulation. So getting the value back that people have surrendered over to the kingdom, I think is going to be a real struggle, at least for the foreseeable future.
Do you have concerns, John, about investing in credit in the energy space right here? I mean, you were just talking about some of those drillers and those service companies that are relying on a certain price of oil that is way higher than we are right now. We could see defaults there. So what's the worry in terms of investing in credit or in energy?
Well, you're going to have to be very selective and look for those companies that have a strong balance sheet, that have a history of adapting to the low price world of oil, because that's what we're into, at least for the foreseeable future, and until moods change or opinions change. But yeah, I think you need to be very selective, take good advice, dig into people's books. You know, the recent Occidental deal is going to be problematic, I think, because it was predicated on a rising oil price, not a falling oil price. So Occidental and its disposal of assets, they've got a rough patch ahead of them.
All right, we're looking at even the big oil companies get caught up in this. John, you are the former president of Shell Oil. You've seen lots of cycles, John, yourself. When you see ExxonMobil down 11%, Chevron down 12%, do you see this as an overreaction?
Yes, and I see it as a great buying opportunity for the patient investor who's in it for the long term. We went through a $10 debacle in the 1998-1999 period, and came out the other side, made a lot of money for investors over the next decade and a half, and it was really the sovereign nation of Saudi Arabia that took the industry down in 2014, and we haven't fully recovered because of the damage done by what I think is a very naive crown prince who really doesn't understand how the industry operates, and his own sovereign fund in the kingdom has suffered mightily because of it.
Oh, yeah.
And it still hasn't recovered to what it once was. So this is just bad management on the part of a monarchy.
Yeah, it's great. It's a great analysis. John, it's wonderful to have you this morning. Thanks very much.
Thank you.
We'll be watching. John Hofmeister joining us as the former president of Shell Oil. We're going to take a break.